Good morning, everybody. The February 6, 2018 School Land Board meeting will now come to order. Before we begin, I wanted to welcome David Gross, an attorney for XTO Energy, who will also be available to answer questions from the board. Thank you for coming in. We always appreciate guests to visit the School Land Board. First item on the agenda is approval of the minutes from our last meeting on December 19, 2017. After the board has had a chance to review, and assuming no questions, comments, or concerns, I could entertain a motion to approve said minutes.
So motion.
I'd like to abstain since I wasn't here.
Forgot about that. Thank you for reminding me. I will second the motion. Motion is made, second, and carries unanimously to approve the minutes. Next item on the agenda is the approval of the consent agenda as posted. Once again, assuming the board has no questions or comments or concerns at this time, I could entertain a motion to confirm the consent agenda as posted.
So motion.
I'll second.
Motion is made, seconded, and carried unanimously to approve the consent agenda as posted. Next item on the agenda is number 3, as stated, consideration and action on tracks, terms, and conditions for the April 3, 2018 oil, gas, and other minerals lease sale.
Good morning, Joy McCauley, Energy Resources. The Energy Resources staff is requesting School Land Board approval for the tracks to be offered on the April 3rd, 2018 oil and gas lease sale, along with the terms and conditions for the said tracks. EnergyNet.com will perform the lease sale online. Staff's requesting School Land Board approval for 295 tracks. 20 of the tracks are in the Delaware Basin. We have a lot of bay tracks. And so the bonus per acre is going to range from $100 per acre to $3,500 per acre. The royalty rates will be the same as the previous sales, as well as the lease terms. The key areas for this sale are the East Bay, Galveston Bay, and Trinity Bay.
Any questions from the board at this time with respect to the proposed tracks, terms, and conditions for proposed lease sale on April 3?
No questions.
This time I could entertain a motion to confirm the proposed terms and conditions.
Motion to approve.
I'll second.
Motion is made, seconded, and carried unanimously to approve item number 3. Next item on the agenda is number 4, consideration and action on application for cabin permits on coastal public lands.
Tony Williams, Coastal Resources Division. Item number 4 is reauthorization of PC 1187 to Glenn Dixon, Laguna Madre, Clayburgh County. If you look on the second page of your packet, you'll have an aerial that shows the location of the cabin, which is the white dot. The Gulf Intercoastal Waterway goes through the Laguna Madre from north to south and passes closest to the cabin at about the number 205. You can see there is a small channel that goes between the number 205 and the cabin, which was utilized to access the cabin. In 2007, the U.S. Army Corps of Engineers performed maintenance dredging on the Gulf Intercoastal Waterway and put the material in that small access channel that provided access to the cabin. The access channel was not dredged for the cabin. It was dredged previously for oil and gas development and was subsequently utilized by the cabin permit holder. After the Corps of Engineers did the maintenance dredging and placed the material in the channel, the cabin permit holder no longer had access to the cabin. He couldn't get there. It's about a half a mile from the intercoastal to the cabin. He could not get boat access to the site, so he was no longer able to utilize it. Since 2007, he has not utilized the cabin, and the permit has expired. Recently, the permit holder has contacted our field office and stated that he now has access to the cabin. I don't know if it's from just the 10 years since the maintenance dredging or because of Hurricane Harvey, but now the channel is passable. And so he would like to reinstitute this cabin permit effective now, and he would go in and would have 1 year to repair the cabin. It's still structurally sound, but there are a lot of repairs that need to be made to it, but still the floor and pilings are solid for the cabin. He would like to go in and rebuild it. He would have 1 year to rebuild it, and there is a special condition stating that he acknowledges that he is aware that he is in a Corps of Engineers dredge placement area. Staff would recommend approval as submitted, and I'll be happy to answer any questions.
So if it is, if Corps does come back and dredge in the area, does that impact the lease? Let's say the board moves forward on this, this action. Can the Corps come back and then create a situation where he no longer has access to the cabin?
That is possible. The dredge material management plan, basically what the Corps is supposed to go by when they dredge in this area, says the material should be placed on the islands that are north of the cabin, and that will enhance these islands as bird rookeries. So the material should have been placed on those islands when they did the maintenance dredging. And if they do the maintenance dredging again, we will request that the Corps puts the material on those islands. They got quite a bit of pushback from the fishermen for filling in this channel as well. So we don't think they will do that again, and before they do the maintenance dredging, we will try to coordinate that with them, that they put it on the islands as dictated in the dredge material management plan. And we have talked to Mr. Dixon, and he is aware that the Corps may do that again.
Does the permit contemplate that, or would you have to come back to the board to amend the permit in order to provide for that?
If he was to change want to change the conditions of the term of the permit, yes, we would have to come back to the board. But it does, he does acknowledge that it is in a dredge material placement area.
If you had to speculate on the probability of that, what would you place it?
It's about 20%. They got a lot of pushback last time, but there has been some turnover. But we do keep a pretty good eye on it since then. We didn't think it was much of a chance because of the language in the DMMP or the Dredge Material Management Plan, but now we keep a better eye on them.
Any questions from the board?
Don't have any.
Is there a motion and a second to confirm?
I'll move to approve.
A second?
Motion is made, seconded, and carries unanimously to approve item number 4. Items number 5 and 6 will be held in executive session. We'll enter said session pursuant to Chapter 551, Subchapter D, Section 551, TAC 071 of the Texas Government Code for discussion, consideration regarding pending or contemplated litigation or settlement offers. We'll also seek or receive attorney advice or counsel-related items 5 and 6 on the docket, and subsection 551, TAC 072 for discussion, consideration concerning purchase, sale, exchange, lease, or value of real property related to items 5 and 6 on the docket. Following executive session, we'll reconvene in open session to complete the docket. The open session of the February 6, 2018 School Land Board meeting will now resume with item number 5.
Russell May with Asset Management. Staff is recommending that the SLB approve the attached 2018 budget associated with the development located in Fort Bend County, Texas, under the terms and conditions as presented to the board and being in the best interest of the state or the PSF. May I answer any questions y'all have?
Any questions from the board?
No questions?
So motion for approval?
Second?
Motion is made, seconded, and carried unanimously to approve item number 5. Next item on the agenda is number 6, as stated.
Russell May with Asset Management. Staff is recommending that the SLB approve the attached 2018 budget associated with the partnership in Galveston County, Texas, under the terms and conditions as presented to the board and being in the best interest of the state and the PSF. May I answer any questions?
Any questions from the board at this time?
I move to approve.
Second?
Motion is made, seconded, and carried unanimously to approve item number 6. Final item on the agenda is a non-voting item. It's the quarterly investment report from our Chief Investment Officer.
Thank you, Mr. Chairman. Members, for the record, Rusty Martin, Chief Investment Officer. As the Commissioner noted, this is a non-voting item. I'm pleased to present you with a quarterly investment report of the Texglow Permanent School Fund Real Assets Investment Portfolio for the period July 1st through September 30, 2017. The performance measurement calculations and statistical data that are presented in the report were prepared by State Street Bank and its private edge group, which are the custodial, accounting, and performance measurement agents for the portfolio. I'm going to give you a brief market summary and then go through the results of the quarter for the portfolio. In the third quarter, U.S. GDP increased at an annual rate of 3.2% after increasing 3.1% in the second quarter of 2017, and the U.S. unemployment rate ended the quarter at 4.2%. The Fed left its target Fed funds rate unchanged during the period, maintaining a target range of 1% to 1.25%. However, as was widely expected, the Fed did announce the implementation of a balance sheet normalization program, and that modifies its existing policy concerning the reinvestment of principal payments from its holdings in agency mortgage-backed securities and the rolling over at auction of maturing Treasury securities. So what they're doing is, starting in October of last year, they began rolling over at auction the amount of maturing Treasury securities that exceeds $6 billion each month, and then reinvesting in agency mortgage-backed securities the amount of principal payments from their holdings of agency debt and agency MBS received during the month that exceeded $4 billion. So a subtle change, but nevertheless a change. They also continue to expect that economic conditions are going to evolve in a manner that warrants only gradual increases in the Fed funds rate. Thus, Fed funds will probably remain below levels that are expected to prevail in the long run. As you also know, Janet Yellen recently retired and was replaced by Jerome Powell as the new Fed chair. I think he took office yesterday, as a matter of fact. And the Fed's been pretty transparent about their intent to increase Fed funds 3 times this year. We will see if they hold to that after what's happened in the market the past few days. Obviously, there are other factors that are involved in movements in the market than just interest rates, but there's no doubt that it seems like the market has taken a look at the Fed's intent to raise rates and made some adjustments in valuations. As far as the commercial real estate market is concerned, the NCREIF Property Index, which we call NPI, returned 1.7% for the quarter. Its trailing one-year return was 6.9%. Industrial was again the best performing sector, and it returned 3.29%. The other sectors were a hotel at 2.30, retail at 1.20, apartment at 1.66, and office at 1.40. In the energy markets, WTI spot oil prices fluctuated around $45 to $50 a barrel, and they ended the quarter at $51.67 a barrel, which was a 12.3% increase from second quarter. The ending price at the second quarter was about $46 a barrel. There's a lot of things going on in those markets. Prices were primarily influenced by encouraging supply and demand fundamentals, starting to see those fundamentals approach a balance point. Also, there was a softening OPEC supply growth and expected supply cap extensions. There also was stronger global crude demand growth in the second quarter, and it was about 2.3 million barrels per day year over year. So that's pretty significant. There also were revised estimates of annual global crude demand growth to about 1.5 million barrels per day, and those are all things that drive that market more and more towards a balance point. Also, I think it shouldn't be overlooked that there's a more cautious tone towards future drilling coming from U.S. shale producers, and that's reflected in a flat total rig count in the second quarter of 940 rigs. As far as natural gas prices go, they ended the quarter unchanged at $2.98 per million BTUs. Most analysts continue to think that rising industrial demand, LNG exports, increased exports to Mexico, and continued coal-to-gas switching will foster medium to long-term supply-demand support in that market. Turning to the report, on page 2, we have a performance summary. I'll briefly go through that, point out the most important things you should look at. The total NAV Net asset value at the end of the quarter, again, we're talking about third quarter of last year, was $6.476 billion. That was comprised of an external portfolio value of $2.886 billion, which is 45% of the total. The internal portfolio was $290 million at 4% of the total, and the cash equivalents waiting to be invested was $3.33 billion. As far as performance concerned, if you look at the top line in that chart on page 2, the external portfolio returned 2.83% for the quarter, and that was against 1.72% on the benchmark, so it exceeded the benchmark by 111 basis points. The real estate sector of the portfolio was up 2.14%, infrastructure was up 2.10%, and energy, reflecting strong commodity price movement, was up 3.82% during the quarter. One-year returns on the portfolio was 18.67 versus 6.37 on the benchmark. That's an excess of 1,230 basis points. Three-year return, 13.13% versus 769 on the benchmark. And five-year return, average return for 5 years, 14.32% versus 8.62% on the benchmark. About, at the end of that quarter, about 35% of the portfolio of our total existing capital commitments remained unfunded. On an individual sector basis, 28% of real estate was unfunded, 42% of infrastructure, and 37% of energy. So you can see that we have managed over the past couple of years to not only commit quite a bit of money to energy, but also to get that money invested, much of it invested, and that's going to really pay dividends to us as the energy market recovers over the next couple of years. If you'll turn to page 7, and we're going to look at page 7 and 8. These are allocations by asset type, and there are two charts. On page 7, you have an allocation based on net asset value, which is the norm for looking at these things, and then on page 8, you have a chart that shows you allocations based on net asset value plus unfunded commitments. So looking on page 7, on a purely invested basis, the external portfolio was still slightly over-allocated to real estate at the end of the quarter at 36% versus a target of 33%. Infrastructure was at 21% versus a target of 32%, and energy was at 43% versus a target of 35%. However, this will continue to change over time and become more aligned with our policy allocation targets as more of the unfunded capital commitments to infrastructure and energy become funded. For example, if you look at page 8, you'll see that on an invested plus unfunded commitments basis, the real estate allocation was 33%, while infrastructure was a little higher than on the NAV basis at 24%, and energy was 43%. So it takes time. This is like moving a big ship. You have to really look out into the future, and you can't control when the money is called. You can just make the commitment, and then you sort of have to monitor it as you go along, but it's hard to make really fine-tuning adjustments. You have to start way in advance, and they're slow curves as opposed to tight turns. Looking at the investment manager exposure, and this is on page 13 and 14 of the report. This is something that we started presenting to you last quarter, and again, we'll look at this on a purely invested basis. The external portfolio is well diversified across 29 different investment managers. The policy statement limits the exposure to any one investment manager to no more than 20% of the total portfolio. So as you can see, the chart's a little busy, but the top 5 highest exposures at the end of the quarter were to USAA Real Estate, and that was at 11.96%. And then that was followed by EnCap Energy at 8.93%, Macquarie Infrastructure Partners, 6.45%, EnCap Flat Rock Midstream at 5.83%, and Morgan Stanley Real Estate at 5.10%. The co-investment vehicles that we use, and we currently have 15 of those. As you know, those are LLCs that are created to invest alongside existing managers in specific assets or teams. Those are grouped by manager, and they're presented separately. So the highest grouped co-investment exposures at the end of the quarter were First Reserve at 8.05%, followed by Intervest at 5.81%. Moving to geographic diversification, this is shown on page 2122. We're close to the targeted allocations for each of the geographic regions. Currently, our allocation to the U.S. is 83% of the portfolio compared to a target of 75%. The international allocation is currently around 8%, and that's compared to a 10% target. And finally, the allocation to Texas is about 9% compared to a target of 15%. That is the end of the presentation. As the Commissioner mentioned earlier, it's a non-voting item, but I'm happy to answer any questions you may have.
Any questions from the board at this time? Just want to state for the record, another outstanding quarter,
Thank you.
making it look easy.
I wanted to make one comment. It looked like the 5-year and out to inception fees were about 2.5%, and it looks like the last year they were down to 1.95. So if I understand the numbers right, it looks like you're managing fees really well.
Thank you. It's something that we really pay a lot of attention to, and we put a lot of pressure on the managers.
There being no further business before the board, we thank you for the report.
Thank you, Mr.
And
Chairman.
we can hereby adjourn the meeting.